Hey everyone. Let me start with a question. If your trading account today has just $500 or $2,000 or $10,000 and a friend tells you they started with 100,000, what goes through your head? Embarrassment? A feeling that my turn will never come? Stop right there. That exact thought is the first thing we need to dismantle today, because this entire video is built to tear that belief apart. I'm not going to teach you a chart pattern today. I'm not going to show you an indicator. Because here's the truth. The people who blow up their accounts don't blow up because of a bad indicator. They blow up because they get trapped inside their own mind. And the people who survive, who actually grow, they don't survive because of some secret formula. They survive because at some point, they learned who they really are under pressure. So today's entire conversation is going to unfold through one man's story. Someone I've known for years. Let's just call him Alex. Part 1. The kid who always did the math. Alex grew up in a mid-sized town, nothing fancy. His dad ran a small hardware store on Main Street. The family wasn't poor, but money was always tight enough that nothing went to waste. Even as a kid, Alex had a strange habit. He counted everything. How much inventory sold that day, how much was left, what the margin was. He'd sit quietly and track it, without anyone asking him to. By the time he finished college, he'd heard about the stock market. At first it sounded like gambling to him, a rich man's game. But then he watched his uncle, who had started with barely $2,000, and slowly built it into real meaningful savings. His uncle told him one line Alex never forgot. Kid, in the market, the size of your account matters less than the size of your discipline. Alex opened his first trading account with $800 from his summer job savings. He felt exactly what every beginner feels. What am I even going to do with this little money? But he made one decision that, looking back, he calls the smartest thing he ever did. He told himself, I'm not here to make money. I'm here to find out how my brain behaves when money is actually on the line. That was the first turning point. Most people show up to the market to get rich. Very few show up to get to know themselves. And that difference ends up deciding everything that follows. Part 2. The first blow up, and the lesson no book teaches. Alex's first 6 trades made money. It was small money, but a kind of intoxication crept in. He started thinking, I've got this figured out. And that's exactly the moment the market gets most dangerous, when it lets you win just enough to lower your guard. On the 7th trade, he put 60% of his entire account into a single position. Some unexpected news hit, the market moved the wrong way, and within minutes half his account was gone. That night Alex couldn't sleep. But what was eating at him wasn't the dollar amount. Losing a few $100s out of 800 wasn't going to ruin his life. What actually hurt was the realization that he'd broken his own rule. He'd done the exact thing he used to criticize other people for doing. The next morning, he bought a plain notebook. And he wrote one line in it that became the foundation of his entire trading journey. Money can come back. But once discipline breaks, it's brutally hard to rebuild. Part 3. The 3 faces inside every trader. Now here's something I want you to really sit with, because you probably haven't heard it framed quite this way. Every trader has 3 different characters living inside their head. And the person who learns to recognize which character is talking, in any given moment, is the one who actually survives this game long term. The first character is the gambler. This character craves excitement. It loves watching the numbers jump around on the screen. It wants to jump into every single move because it's terrified of missing out. This character thinks, one big trade and everything changes overnight. The second character is the scared kid. This is the part of you that wakes up after a loss. It sees danger in every small flicker of the chart. It panics out of winning trades too early, and it freezes and clings to losing trades, hoping maybe it'll come back. The third character is the calculator. This is the calm one. It doesn't get excited, and it doesn't get scared. It just weighs probabilities. This character is usually the weakest voice at first, because it speaks the quietest, and in a noisy room, the quiet voice gets drowned out first. It took Alex months to really understand this. He started writing, next to every trade in his journal, which character had actually made the call. Slowly, a pattern became undeniable. About 80% of his losing decisions came from the gambler or the scared kid. And most of the decisions the calculator made turned out fine, even when the profit was small. That's where it clicked for him, and this is the part one want you to walk away with. Your job isn't to hunt down the biggest trade. Your job is to give the calculator the microphone, every single time. Part 4, small capital isn't a punishment, it's boot camp. A lot of people treat a small account like a curse. But flip that thought for a second. If you had $200,000 and made one serious mistake, that mistake could wipe out a life savings. But when your capital is small, the cost of a mistake is small too. That's the protective shield you've been handed at the start. Use it. Think about how a pilot is trained. No pilot climbs straight into a 747 full of passengers on day one. They spend hours in a simulator first, then fly small planes, make mistakes, even crash, but in a controlled environment where the cost of failure isn't someone's life. Your small account is your simulator. It's the place where you're allowed to fall down without your entire financial future going down with you. Alex puts it this way: if I had started with a huge account, I probably would have quit trading altogether, because the first big mistake would have broken me completely. Starting small let me fall, and it let me get back up. So the next time that thought creeps in, I'm behind because I don't have enough capital, flip it. Tell yourself instead, I have less capital, which means my mistakes come cheap right now. Don't waste that gift by rushing. Part 5. The trap almost everyone falls into: revenge recovery. Now let me walk you through a trap that catches 9 out of 10 new traders. Call it revenge recovery. After a loss, the brain starts playing a strange game. It says, if I just size up a little on the next trade, I can make back what I lost. That sounds logical on the surface, but it's actually one of the most dangerous thoughts you can have, because it isn't coming from math. It's coming from pain. Alex almost fell into this trap one day, and caught himself right at the edge. I had 3 losing trades in a row. Every instinct told me to double my position on the 4th trade, just to get back to even. But then that line from my journal popped into my head: money can come back, discipline can't. I closed my laptop and went for a walk instead. That decision to go for a walk, that was the real trading skill in that moment. Chart reading, any decent book can teach you. But stopping yourself in the heat of the moment, that only comes from self-awareness built over time. Remember this: the market isn't out to get revenge on you. It genuinely doesn't care. It's not happy when you lose, and it's not sad when you win. That pressure to get it back exists entirely inside your own head, not in the market. Part 6. Patience, the weapon that's invisible and also the fastest. Let's talk about patience for a second. I know, it's a boring word. No YouTube video wants a title that says, just be patient. But here's the truth. The sharpest weapon in trading isn't speed. It's stillness. Picture a fisherman sitting by the shore. He doesn't cast his line at every single ripple in the water. He reads the water, studies the movement of the fish, and waits for the exact right moment before he casts. A beginner gets excited by every wave and casts constantly, which doesn't just scare the fish away, it burns through his own energy. Trading works the same way. A new trader wants to jump on every little wiggle in the price. An experienced trader might sit and do nothing for hours, sometimes days. They're just watching, reading, waiting, and they only act once the setup is genuinely clear. Alex noticed something strange when he reviewed his own trading journal. 90% of his profit came from about 10% of his trades, the ones where he'd waited the longest before pulling the trigger. The other 90% of trades, the ones he entered impatiently, either broke even or lost money. That number points to a deeper truth: you don't need to trade every single day. You just need to recognize the right day when it shows up. Part 7. The real math behind growing small capital, the quiet power of compounding. Now let's talk about something very few people actually understand, because on the surface it looks painfully slow: compounding. Picture a small sapling. In its first week, it grows maybe an inch. Same the second week. For months, it might look like nothing is happening at all. But underground, the roots are quietly getting stronger. And then one day, seemingly out of nowhere, that plant shoots upward fast, because the foundation was already built. Money grows the exact same way. If you're consistently making small, steady gains on your capital month after month, the early months will feel almost pointless. Your brain will get bored. It wants a fast spike, a big jump. But it's this slow, steady rhythm that eventually turns into serious force. The problem is, the human brain reads slow growth as boring, and it instinctively avoids boring things. That's exactly why most people abandon steady growth and chase gambling-style trades instead, because gambling feels exciting, even while it's quietly ruining them. Alex's advice here is blunt: let yourself be bored. Boredom is actually a sign you're on the right track, because excitement, more often than not, is the opening act of disaster. Part 8. Learning to make peace with losses. Here's something that might sound strange at first, but stay with me. Most people fear losses like they're the enemy. But traders who actually last treat losses completely differently. They see a loss as the cost of admission, the ticket that keeps them allowed to stay in the game. Think of it like running a business. Any shop owner knows some inventory will spoil, some customers won't pay on time, some months will run at a loss. A smart business owner builds that expected loss into their overall math ahead of time. They don't get shocked or devastated by every single loss. They know it's simply part of doing business. Trading needs that same mindset. Not every trade has to win. What matters is that when you lose small, and when you win, you let it run big. That imbalance, small losses, big wins, is the entire engine of this game. Alex built a habit around this. Before entering any trade, he'd ask himself one question. If this trade goes wrong, how much am I actually willing to lose? If the answer made him uncomfortable, he simply didn't take the trade. It sounds almost too simple, but very few people actually follow it. Part 9. The moment Alex broke, and the moment he got back up. Let me tell you about the most painful chapter of Alex's story. After about 8 months of steady work, his account had roughly tripled. He was starting to believe he'd cracked the market. And that exact confidence is what knocked him down again. One day, a major piece of news was set to drop. Alex was convinced he knew exactly how it would play out. He abandoned all his usual caution and put almost his entire account on one side of the trade. The news hit, and the market moved in the complete opposite direction. Within minutes, he'd given back most of 8 months of progress. That night, Alex felt genuinely broken. But this time, the pain was different. Because he knew this mistake wasn't an accident. He'd knowingly broken the very rules he'd written for himself in his own notebook. The next day, he opened his journal to a fresh page and wrote just one line. I don't need to be certain. I need to be prepared. That single line became the backbone of his entire approach going forward. Certainty and preparation are not the same thing. Certainty says, I know what's going to happen. Preparation says, I have no idea what's going to happen. But I'm ready either way. Part 10. The power of thinking differently from the crowd. Here's another layer worth understanding. Most people in the market simply do what the crowd is doing. When everyone's buying, they buy. When everyone's panic selling, they sell too. But someone who only ever moves with the crowd can never actually get ahead of the crowd. Picture a mountain climber. When everyone's crowded onto the same slow, congested trail, the fastest and safest route is often the one nobody else is taking, but spotting it takes both nerve and genuine understanding. This doesn't mean you should always do the opposite of the crowd. It means you need to learn to trust your own read of the situation, not the noise around you. The crowd is always most excited exactly when the opportunity has already run out. And the crowd is always most terrified exactly when the real opportunity is sitting right there. As Alex puts it, I learned that my job was to read the emotions of everyone else on the screen, not my own. When everyone's overly excited, that's my cue to get cautious. When everyone's terrified, that's my cue to look closer. Part 11. 3 habits that saved Alex. Now let me hand you 3 concrete habits Alex built, the ones that slowly turned him into a stable, consistent trader. Habit 1. A written plan before every single trade. Before entering anything, he'd write down 3 things: where he'd enter, where he'd exit if he was wrong, and where he'd take profit if he was right. If all 3 weren't crystal clear, he simply didn't take the trade, no matter how tempting the setup looked. Habit 2. A fixed percentage of capital at risk, every time. He set a personal rule: no single trade would ever risk more than a small fixed slice of his total account. That meant one mistake, no matter how bad, could never wipe him out completely. Habit 3. An emotional check-in. Before every trade, he'd ask himself, am I calm right now, or am I excited, or am I scared? If the honest answer wasn't calm, he'd shut the screen down completely, no matter how big the opportunity looked in that moment. He'd learned that even a technically correct decision, made in the wrong emotional state, usually turns out wrong anyway. These 3 habits sound almost too simple. There's no magic formula hidden inside them. But that simplicity is exactly the point. Complicated strategies get forgotten, and they crack under pressure. Simple habits, repeated over and over, hold up even when things get intense. Part 12. The real test of small capital: learning when to stop. Here's one final, deep point that most people completely overlook. Sometimes the smartest possible decision is to take no trade at all. That sounds bizarre, because we assume trading means constantly doing something. But in reality, doing nothing is also a decision, and often the wisest one available. Alex explains that whenever he hit 2 or 3 losing trades in a row, he'd step away from trading entirely, sometimes for a day, sometimes for a full week. During that time, he'd go back and reread his old trades, trying to understand exactly where things went wrong. He knew that any decision made from a tired or emotionally loaded mind was a decision made at risk. This ability to step back is really what separates an experienced trader from an amateur. The amateur keeps chasing because they're afraid of missing out. The experienced trader stops because they know the market will open again tomorrow and the day after. But if the account runs out today, tomorrow's door closes for good. Part 13, the biggest myth about small accounts. Now, here's a myth that lodges itself in almost every new trader's head. The smaller my account, the bigger the risks I need to take to grow it fast. That thinking pushes you in exactly the wrong direction. The truth is the opposite. The smaller your account, the more careful you need to be, because you have far less room to recover from a mistake. Someone with a larger account can absorb a bad hit and still have plenty of room left. Someone with a small account doesn't have that cushion. So a small account doesn't call for bigger risk, it calls for waiting for genuinely high quality opportunities. Fewer trades but far better ones. That mindset is exactly what turns a small account into a big one over time, slowly but solidly. Alex explains it with a simple image. If you only had 5 bullets, you wouldn't fire in every direction. You'd wait until you had a clean shot. Your capital is your bullets, don't waste them. Part 14, where Alex is today. Alex's story today isn't some overnight movie-style rags to riches story. His account grew slowly, over years of consistent work. But the thing that changed the most wasn't his balance, it was his mind. He says, I used to think the market was going to make me rich. Now I understand, the market changed me. And a changed person eventually finds a way to build wealth, not just in trading but in every part of life. He still keeps that same notebook. It's got hundreds of pages in it now. Mistakes, lessons, small wins, bigger lessons. And every time some excited new trader asks him, what's the fast way to get rich? He just smiles and says, there's no fast way to get rich. There are plenty of fast ways to get poor. There's exactly one way to build real wealth slowly. Understand yourself and stay committed to that understanding. Part 15, your turn now. So if your account is small right now, don't treat that as a weakness. Treat it as your training ground. This is where you'll meet the gambler inside you. This is where you'll meet the scared kid inside you. And slowly, this is where you'll build up the calm, calculating voice that eventually becomes your greatest strength. Remember 3 things from today. First, protecting capital comes before growing capital. Second, patience isn't weakness, it's the sharpest weapon you have. Third, a small account isn't a punishment, it's a chance to understand yourself without paying a devastating price for it. If this conversation made you rethink something today, drop a comment below and tell me which character shows up the most in your own trading. The gambler, the scared kid, or the calculator? Because the day you finally recognize which one is talking, that's the day your real trading journey actually begins. Make sure you're subscribed to this channel, because next time, we're going to break down exactly how these small daily habits, over time, quietly turn into real financial freedom. Until then, protect your capital, keep your mind calm, and let the market come to you. Thanks for watching.